Good afternoon. Today is April 17th, 2020. I'm your host, Ruzar from Zar and Associate Marketing Group. Today, I have with me Mr. Gennady Kervoy, Manjeet Gill, and our other partner, Kevin Ong. Given the current pandemic, we have committed to doing weekly expert panels where we bring in experts related to different topics that's on everybody's mind these days. One of those topics that we wanted to cover today is related to mortgages. Mortgages, line of credits, considering most Canadians are going through difficult times right now, whether they're homeowners, business owners, or simply everyday working class people who need access to money basically more than ever now. Our special guests are our lending partners and senior mortgage brokers who are very experienced in the lending field and been in the business for a long time. They're some of the top brokers in Canada, and they have done over $300 million a year in mortgages annually. A warm welcome to our special guests. We got Mr. Lev Kesselman, we got Alex Sheen, and we have Julie Tran. Welcome, everybody. Thank you guys for being here. So we're going to jump into this. Given the current pandemic, given the difficulty that most Canadians are facing these days, what information do you feel is important for our audience to know right now?
I'll take this one on. Thank you for having us on here, Ruth. I think the biggest things that we want Canadians to know is that we're really all in this together. This is new for everybody. We've been in the industry for many, many years and we've never experienced this. So everyone's really working with each other to get through this. The lenders have done a great job in being able to adjust to this and really not to panic. It's all very, very temporary, right? So again, nothing really has changed too significantly on the lending side, and we are going to work with you to get your mortgages done.
Awesome, awesome. And I know Gennady had some questions related to some minimum requirements to get a mortgage these days. I'll let him ask that question.
Well, I think the biggest question that most people have is about the deferral options that lenders are offering and that the government is promoting. So I guess the question is, what can homeowners need to know about that? Who should apply for these deferrals? Who should not apply for these deferrals? That kind of specific idea.
Well, the deferrals, Bruce, thank you for having us. Thank you, everyone. Well, the most important thing with the deferrals, number one, let's acknowledge the fact that all the lenders, the insurers, all came through with that option for Canadians. Having at least that option is a really great resource to have. Now, having said that, there is an interesting analogy that we sometimes use, and it's the toilet paper analogy. And what it means is that if one person or two people go and buy up all the toilet paper and create the panic and there's not enough for everybody, that in itself creates uncomfortable situations for a situation for everybody else. Now we use that for the mortgages as well. Many of our clients are, if they're unable to put food on the table, or if they're not able to take care of the necessities, then those deferral payments are there for you, and that's exactly what they were created for. But the mission of those deferral payments is not for absolutely everybody to go take advantage of it and create even more stress on the market and more stress to the lenders. So our suggestion, our recommendation to all our clients so far has been that if it's absolutely necessary and you need to use that option, please go ahead and use it. It's a great tool to have, and we're very thankful to the Canadian banks and to the insurers for coming up with that solution. But if you are in a position where your income hasn't gone down, or if you have enough savings to potentially make the payments and this would not impact you financially that significantly, please continue making the payments as you were before. And truly the same sort of thing applies to rent. If you're unable to provide for your family because you got laid off or because there's lack of savings, then you should talk to your landlord and come up with some sort of solution. But if you're in that bracket where you are able to continue making the rent payments, the mortgage payments as well, please do so, because that will alleviate the stress from the system overall, and will make it much easier to get through this questionable period of time.
Appreciate your feedback there. I think
Can I just add something to that? Just kind of thought like, what percentage of homeowners do you think are going to take advantage of this or have taken advantage of it so far? And is there kind of a tipping point where like, if too many percentage of Canadians do that, it could create that panic, like you're saying?
You're muted, Lev.
You see, like the way that pretty much like the way that the situation is, the numbers we hear from a lot of the banks is around so far around 10% of mortgage holders have asked for a payment deferral, and it's difficult to speak to the accuracy of this. Now, like pretty much, I'm sure all of us in the industry have heard those stories that they've been on hold with their bank for 5 hours trying to get through to defer a payment. It's a challenging time, and I think like over the past couple of weeks, many of the banks have streamlined the process where they added to their online banking options when you just kind of fill up a form. Bank of Canada is providing a lot of extra liquidity, which is ultimately helping the banks through this. And I think the one other part to keep in mind that most banks do have a kind of skip a payment option. So let's say prior to COVID-19, if somebody would have been laid off, they do, with most institutions, have an option to skip up if they wish. So it's nothing new, just right now it's much more affects everybody than before. So banks are definitely seeing much more of those requests than they would see a couple months ago.
Okay. So
I've seen, to be honest, I've read a couple of reports where some people have mentioned that it's as high as 30%. Most of the reports, like Lev said, are coming back at around 10%. And again, the lenders, when they just rolled it out, of course, you would be on the phone for 5 hours because they were not sure. This is something new for everybody. They were not sure how to handle it. And of course, with time, and it only took them 2 weeks to roll it all out online to make it easier to apply. The wait times have been reduced drastically. So, I mean, everybody, first of all, we're all in this together. Everybody's trying to make the process as smooth as possible. But you have to understand that no one was ever in this situation before. So I think it's around 10. I also tend to agree that it's most of the reports are saying around 10%. So, you know, so far it seems okay.
Yeah, it's not as bad. Okay, thank you.
Oh, no problem.
So I have a question. So we've noticed that the Bank of Canada has reduced the prime rate, but we're seeing that the mortgage rates are still continuing to go up. Can one of you maybe explain the reason for that?
Sure, I'll take this one on. Well, the way it works in terms of from the bank's point of view, like they have their cost of fund, and because at this point in time, like the default risk has gone up a bit because our unemployment are going to hit record highs, is bank are pricing much more default into their mortgages. Now, there's two aspects. So there's the fixed mortgage and the variable mortgage. On the fixed mortgage, all it is as much as they're pretty much cost on fund, which is the bond rate has gone down somewhat. They're just pricing in a bit more default. And it's not just the payment deferral, but they are pretty much, banks are worrying in terms of how well would potential borrowers be able to actually make payments going forward if our current situation goes on for a long period of time. On the variable side, all banks have dropped their prime rate at this point in time with accordance to pretty much what Bank of Canada did. But on new mortgages, the discount or the premium against prime rate is much different than it was, let's say, 2 months ago. And it comes down to the same thing. The bank's cost of fund on those variable rate mortgages has gone up simply because there is much less investors who are buying those mortgages and they want a bit more of a premium whenever they do invest into residential mortgages.
I guess ultimately the banks are in business to make money, and they're there to kind of try to mitigate the risk. And given the risk, I guess common sense would say that's why they've gone up. Is that accurate, Lev?
Well, like ultimately, I would say their cost of fund has gone up. So the banks are more or less are maintaining the same margins they have before. It's just they're paying a bit more compared to the kind of, their cost of fund has gone up. So they're passing on that increase to the consumer, trying to keep the same margin they're making on their funds as they were prior to the whole COVID-19 issue.
Mhm.
So I have a question in regards to when it comes to actually getting the mortgages itself right now for our clients. You know, they're brand new in the market. They're you know, that they're still sustaining the job. Like, how hard is it for them to get a mortgage? Has anything changed?
Well, the qualifications haven't really changed. The qualifications are still dependent on the three factors as they were before this. Lenders, whenever granting a mortgage, look at three things: down payment, credit, and employment. If your credit score is adequate and your employment, you can show that you're still employed, and the down payment, and you can show the minimum required down payment or whatever down payment you need to put down. So that aspect hasn't really changed. Now this is a fluid situation, and a lot of things change even on the daily, and they also change with different banks. So one of the recent ones, one of the recent changes is that you can no longer use a home equity line of credit for the down payment of a purchase of a rental property. So that's something new. So not to go into too much detail, but on the broad scale, if a family is looking to buy their first home or a primary residence, nothing much has changed. But if you are starting to look into refinancing, or if you're starting to look into debt consolidation or purchasing investment properties, there have been some changes introduced that may or may not affect your situation.
Thank you.
No problem.
Gennady had a question regarding the rates.
Kind of just based following the Kelvin's question there. Has anything changed in terms of fixed versus variable? Like, what kind of product makes more sense in this environment? Like, what are you recommending more to your clients, generally speaking?
I can take that on. I mean, every individual is going to be completely different, right? The purpose of their financing and what they're purchasing it for will be different. So that's a conversation to have with us when you do a mortgage, and we can give you the best option possible for you. But generally, right now, what we have been advising clients to do is go into a variable rate, because the variable rates are lower than the fixed rates at this time, and to take advantage of the Bank of Canada's low prime lending rate. What the variable rates, the great thing about them is that you're actually able to lock it in anytime after you set up the variable rate. So say in a year, the fixed rates have gone down drastically, you can actually go into your bank and lock it in at those lower fixed rates.
So I guess it's very specific to the client's needs, and I guess we can't paint the picture with the same brush. We would have to basically consult with them, their certain situation. What are they buying it for? Are they buying it to live there? Are they buying it as investment property? Are they buying a commercial property? So to our audience out there, you know, we created this content to give you some general ideas. If you have some specific questions related to your specific needs, we make sure that one of our lending partners is available to answer those questions for you. And we can set up a complimentary consultation session on the phone or during Zoom to be able to answer some of those questions for you guys. So feel free to reach out to us if you have any questions related to that. I know Manjeet had some questions regarding refinances.
Yeah, so I know we may get asked this question from our clients, and we don't have the answer. You know, that's why we come to specialists like you guys. So if we get someone asking us what advice you would have for anyone who's kind of looking to refinance at this point. I know that Alex touched on it a little bit, but maybe if one of you guys can just expand on that. It could be for investment, it could be for anything, just someone who's looking to refinance right now.
Sorry, would you like me to take it, or?
Sure, any one of you, whoever would like to take that one.
Sure, I guess I can take it. Well, it comes down to, I'll say same as the previous question. It's very client specific. What's the reason they are refinancing? Ultimately, there's always a cost to refinance, and it is breaking the current mortgage, and it is like legal fees, appraisal costs. I think we did have an unprecedented amount of calls over the past couple of weeks, people asking to take out their home equity just in case. And obviously been always advising against it unless there's a specific reason. So banks are not necessarily making it more difficult to refinance right now. And I think a lot of banks have came up with pretty unique programs for somebody to be able to actually refinance if they have been laid off, meaning if they've been issued a record of employment which has that temporary shortage of work code on it. And if tapping into the home equity is the one way for them to kind of keep above ground, clients can obviously do that, but we've been strongly advising from doing it just in case, just to see what happens. There's also a lot of clients right now who are in good financial shoes, did not lose their jobs, do have savings, and some of them been refinancing to take advantage of the stock markets or to buy rental properties, which is also pretty much, I guess, long story short, it really depends on the reason why they want to refinance and their overall financial picture.
One thing to add to that is the fact that you will have typically two types of clients. You will have clients with a variable mortgage from before, and you'll have clients with a fixed mortgage from before. Now, if they're looking to refinance, mind you that before the issues with COVID, the variable rates were at prime minus 60, roughly plus minus 0.1%. So those people right now are sitting on a mortgage rate of 1.85%. If they want to refinance, just as Lev said, just in case, it's not really worth it, because then they will be foregoing the discount that they have right now. And the clients that come into this with a fixed rate mortgage, unfortunately, could face much higher penalties, and refinancing just because might not make sense. If a client does have something specific in mind, such as enhancing their portfolio, enhancing their RRSPs, enhancing their buying more stocks, if they talk to their financial advisor, if there's a specific strategy, we can show the cost of that strategy, and it'll be up to them to make the decision whether it's worth it or not to pursue it. But doing something just for the sake of having a few extra dollars just in case, it's not really, in most cases, it's not really worth it.
Thank you so much for that.
I have a general question, and this is more of a general personal question rather than a professional question. At the end of the day, I do recognize that none of us are senior analysts or people that are good at predicting the market, but I'm very curious to hear you guys' personal take on where you feel that, let's take two case scenarios. Based on what we're hearing from the government and from people that are supposed to be pretty smart people, they're saying that this thing is going to continue till July, best case scenario. Assuming that we take the best case scenario and this thing dies down in July and a lot of these businesses that have been shut down, they reopen back up, how do you guys feel this is going to affect the economy and the landscape of what we've been experiencing? And again, I know you guys are not senior analysts and you don't get paid to make predictions. It's solely, I'm curious to hear from your personal point of view, because you guys are out there dealing with a lot of business owners. You're dealing with a lot of people that are in the investment part, that see opportunities all the times and they take advantage of it. So being in the field, it gives you guys a wide view. So I'm curious on you guys' take on that. What do you guys feel things are going to go in the next few months? At best case scenario, let's say.
My opinion. Oh, sorry.
Go ahead.
Okay. I mean, I'm very optimistic, right? Like, I think this is all very temporary, right? And even if it's a best case scenario, we're out of here and not quarantined after July. I think once July hits and, we're all free again, everything will start bumping back up. So I'm very optimistic about what's going to happen.
Okay, awesome. Do Alex and Lev have a dichotomy view to that? I
don't necessarily. I mean, obviously, making a prediction is just your opinion and so on and so forth. But I would like you know, we spoke to a lot of our clients, and a lot of them do have extensive commercial rental portfolios. A lot of them have extensive residential portfolios. To me, what the most amazing part during those hard times is really how people see that we're in this together. We have commercial landlords who were the ones to call their tenants and give them a month, 2, 3 months of, you know, not charging them rent in hope that they will come back and start up their business and rehire the people. So unfortunately, some businesses will not be able to survive. And, you know, we're seeing articles every day where institutions that have been around for, you know, 20, 30 years, unfortunately are forced to close their door. In Vancouver also, where property taxes are quite high, businesses like restaurants were already struggling pre the COVID, you know, era. And some of them, unfortunately, this was the final nail in the coffin, so to speak. But just seeing the response, at least with the clients that we deal with, both on the landlord side and on the tenant side, I really do hope that the economy gets started faster, and businesses, you know, Canadians will choose to shop local and to go to their restaurants and to support local businesses, vacation a little bit more in BC. So if that happens, and so far it has been on that track, I mean, the support is enormous. You got local breweries where people are ordering unprecedented amount of beer for their home delivery. Some of them don't even drink beer, but they'll still order something to support. So if that attitude continues in BC or in Canada as a whole, I think we will be coming out of this a lot faster. Now, your other thing is how pessimistic could it go? Well, it really depends how long this will last. An economy cannot go on and be shut down for 5, 6 months and then all of a sudden restart like there's, you know, like nothing happened. Obviously, that's not gonna happen. So we will see. I am optimistic as well. I'm very optimistic, especially seeing how people treated the whole situation. Look at the enormous support at 7 o'clock. Look at the donations. Look at the food that's coming to the hospitals from local restaurants. So I really do hope that once this is over, our attitude will stay the same and we'll continue supporting each other, because again, we're really in all of this together.
That's awesome. I appreciate that feedback, and I couldn't agree more. During these difficult times, our true characters come out, and I think more important than ever for everybody to come together. Like yesterday, Manjeet cooked for 50 to 100 people, and you know, she went out and she distributed all that, you know, to people in need or different businesses. So more generosity and acts of kindness like that will definitely go a long way to help all of us. And that was our intention of creating some of these programs here, to see what value we could give to other people. Because during these difficult times, everybody wants to know there's somebody that's looking out for their best interest. Lev, I'm curious to hear your point of view on this. I got Julie and Alex's. Let's hear your point of view.
Well, you see, pretty much, in my opinion, and from what we hear from a lot of experts in the financial field, is that the economy was doing pretty well up until the COVID situation kind of hit early March, mid-March. So I would, like my personal opinion, I think we are going to be like, once we go back to normal, the economy is going to be just fine, simply because there is no underlying economic conditions prior to this that would kind of cause any kind of slowdown. Mm-hmm. The other part, and you guys can kind of comment on your end, pretty much, we had very good demand for real estate prior to this situation. We had a fairly strong, pretty much a fairly strong February and like a very strong beginning of March, up until everything sort of died down a little bit on the buying side. And I personally don't think that the demand for real estate is going to go down significantly once we're back to normal. The flip side of it, as Alex said, if this is going to go on for longer than expected, at that point in time, the economic damage might be a bit more severe. But I think the best idea is pretty much to focus on what we control and hope for the best.
So I appreciate you guys getting on here with us today, and I appreciate you guys giving us your feedback. To wrap this up, just want to put this out there again to our audience. If you're going through difficult times, you cannot make payments, there's options available for you. If you'd like to talk to one of our experts and one of our associates, please get in touch with us. If you're looking to take advantage of the market in these difficult times, I was speaking with my coach yesterday. He mentioned that during difficult times, opportunities come masked as problems. So you're always going to have to take on things that other people are not willing to do if you want to take advantage of the market. So there's always opportunity, even though it's masked as a problem. So if for somebody that's looking to take advantage of that, we could also create a game plan as well. I appreciate you guys being here today, and we look forward to our next call together.
Thank you for having us.
Thank you for having us.
Thanks a lot, guys.
Bye.